Hello, good morning, ladies and gentlemen. Happy Monday to everyone, and I hope we all had a wonderful and beautiful weekend. So let's quickly get this started. So if you can hear me and you can see my screen, kindly type in hi in the comment section so that I can get a feedback that we are good to go this morning. So I would like to see some feedback, please. If you can see my screen and you can hear my voice clearly, type in hi in the comment section. So this will enable me to know if we are good to go. All right, so I want to see some feedbacks in the comment section. So what do we have here? All right, okay, Vivi, good morning to you. I see you. Thank you very much. 735, good morning. 766, good morning to you. 143, good morning. Yaoni, good morning to you. 440, good morning to you as well. 747, good morning. Holuwa Femi, good morning to you. Glad to have you around, Femi. And 435, good morning. Another morning to learn. Sure, exactly. Another morning to learn. 435. You're welcome around. Cast, good morning to you. Okay, Cast wants us to treat CADJPY. Well, I will be looking at that if you don't mind. It's been a while since I traded that pair, but we shall be taking a technical dissection of that pair. So I will pen that down as we try to incorporate it into our plans for today. 490, good morning to you. Thank you very much. 603, good morning. Glad to have you around. Hey, Carrie, I see you. Good morning, Carrie. How are you doing today? And I hope you had a wonderful weekend. All right, I think with this dozens of confirmations here, I would take this as a feedback that we are good to go this morning. I'm so excited to welcome you all to yet another promising session on the X Trend Speed Live. My name is Sharif Daramola, and for the next 1 hour, we shall be reviewing and evaluating the financial market using technical parameters to identify trading opportunities lining up for us today and the rest of this week. And for those who are joining us for the first time, you are highly welcome. I'm glad to have you around, and I hope that you will find this session very useful to you. So what we simply do here on a daily basis is to gather here as a community in anticipation of the New York session to position ourselves, review the financial market, identify the technicalities about the market structure, and use whatever we have discovered to position ourselves in anticipation of the New York session. So we do this on a daily basis, and today being the first trading day of the week, it's a Monday, and what we normally do here is to review random pairs. So if you have any instrument, commodity, cryptocurrency, or options you want us to look at, this is the right time to drop it in the comment section, and I assure you this will be the pairs and instrument we shall be monitoring throughout the course of the week. Personally, I have some couple of pairs we are going to be looking at, and stay tuned in as we get this started. So as usual, the first thing we are going to be doing this morning is to run through the economic calendar to see if we have any macroeconomic event to put into consideration while we monitor the current market structure. And in fact, based on the currency pairs that I have with me here, we don't have any macroeconomic event for today and for tomorrow. And if we are going to be including the CADJPY into our list for this week, then definitely we shall be looking forward to the consumer price index for the Canadian dollar, and that will be coming up tomorrow. And so we shall, and we also have this week list with series of high impact event. This week also we are going to be looking forward to the FOMC. We want to be seeing the rate hike. Is it going to be a 25 basis point or is it going to be a 50 basis point? These are things that everyone is looking forward to. And last week we witnessed the tumble of the US oil as US oil price tumbled with over 14% decline during the course of last week. And for me, I said in my public platform that this is not as a result of supply and demand, but I think it has to do with the economic situation in the US. Remember, we have the SVP issue, we have the Bank of Signature issue too as well, and in the Europe too as well, we have the issue with the Credit Suisse too, and these are events that is definitely affecting the US. Or you all know that the bank is the institution that finances the buying and sale of the commodity, and if the bank is not healthy, definitely majority in the market will be pulling out their funds from the oil. And the dollar too also has been witnessing some weakness so far in the last couple of days here, and most people have been withdrawing, most investors have been withdrawing their funds from the dollar too as well, as the fear for recession is very loud and clear in the market right now. So everyone is looking forward to the FOMC to see what the US economy is doing in that regard. So we shall be looking at all this from a technical standpoint in the market in anticipation of the New York session today. So with that being said here, let's dive in to the current market structure. So as usual, the first commodity we are going to be looking at this morning is the US oil. And what we are going to be doing here is to scale up to a much more higher time frame, like the daily time frame, so that we can have a better perspective into what is really going on in this market. Now, looking at the daily time frame here, it is quite obvious that price action has been bearish, at least in the last 7 to 8 months. Now, if you see what we have here, since the month of June, July last year, we saw our price action has consistently found lower highs, and as a result of this, we had this bearish trend line figured out. However, if we zoom into the current structure here and look at what has been happening in this market in the last 4 to 5 months, you will see that price action was initially caught within a channel just right within the $83 area, which was serving as a supply zone for over 4 months in this market. And we also had the demand zone sitting between the $72 level and the $70 area. Now, what happened during the course of last week was quite interesting here, as we finally saw price action break out of this channel after such a long time. So the breakdown of the $70 level was a significant signal here that might likely tilt price action to the downside. And when I looked at the structure here, we saw that last week's trading session saw price action hit the lowest point it has been since the month of December 2021. Price action tested the $65 level. And when I saw the situation here, I had to relate this current structure to what has happened in the past. And in order to do that, I scaled up a little further into the weekly time frame, where you begin to see things more clearly. So going into the weekly time frame, I looked at the $65 area and look at where price action tested during the course of last week's trading session. So we saw the breakdown of the $70 level. Price action dropped to test the $65 area. And if you look at the importance of that $65 level, you will see that it has been a major determinant of price action in the past. Look at what happened here in the month of December 2021. And look at this in 2021. Look at this in March 2021. Look at this area. It was a strong selling niche in the year 2019. And in fact, it went to as far back as let me see here, 2005 here. So the $65 level has been a major determinant of price action. And because of this situation here, the $65 level will be serving as a yardstick for trading activity for today. So what I simply mean by that is that we are going to be patient this week to see how price action will be reacting to the $65 level to decide if we are going to be buying or selling the US oil for today. Then in addition to the $65 level on this chart is this bullish trend line I was able to figure out when I went to as far back as the year 2016. And when I connected the series of higher lows since the year 2016, I was able to identify this bullish trend line here. Though we had a breakout here in the year 2020, but price climbed back above the structure during the early months of the year 2021, and since then price action had continued to respect this bullish trend line to further emphasize the strength of the buyers at this point. And if you look at what happened here last week, coupled with that key level we just identified at the $65 area, you will see that we are at a critical confluence here where the $65 level and the bullish trend line here shares a beautiful confluence. And looking at the current situation here, anything could actually happen from this current market structure. If we start seeing buy pressure resume above the $65 level on our lower time frame, there is a high chance that price action will be respecting the $65 level and the bullish trend line one more time to incite a bullish momentum in this market. So that is one scenario we are going to be taking into consideration when we scale down to a much more lower time frame. Then another thing that could happen here is we could have a breakdown of both the bullish trend line here, which appear to have already happened this week, but though we can't say for sure at this point in time. Breakdown of the $65 level, probably selling pressure resumes below the structure on our lower time frame to confirm a sell-off in this market. So these are the two possibilities we shall be looking at going into the new week. Then another thing I would like to lay emphasis on, considering the breakdown of the $70 level, a very key significant structure, a zone which has been a demand zone for about 3 to 4 months in this market, broken to the downside last week. So it is a key structure in this market too as well. So if buy pressure resumes above the $65 level here, we might likely see price action do a retracement back into structure in anticipation of another wave of bearish momentum. So we shall also include this possibility into our plans for this week. So these are the things we shall be looking at, and in order to have a better perspective into what is really going on in this market, I was able to identify a simple setup here on the 4 hours time frame, which I think we can use to guide our trading activity for this week. Now, when we scale down into the 4 hours time frame, this is what we will be seeing at first. If you look at what has been happening here since I think the last week of the month of February, it's quite obvious that price action has been bearish on this chart. And in fact, to further emphasize the bearish momentum on this chart, you can see that price action has transitioned into a descending channel. And when we connect the series of lower highs here, we have the resistance line of that descending channel. And when we connect the series of lower lows in this market, we have the support line of this channel. So it is quite obvious that price action has been bearish. However, that is not where we are going to be focusing our attention for this week, but the structure after the breakdown of that key level had the $70 area. Now look at the structure that happened here last week after the breakdown of that $70 level, which we said was the first time price action will break below the structure since December 2021. We saw price action drop to the downside, probably into the $65 zone area. We saw price climb up once again into the $70 level, as you can see here that every attempt by the buyers to break back above the $70 level was met with strong resistance from the sellers. And as a result of this, we have a resistance line at the $70 area, and then we have the support line at the $65 area, where we have been witnessing buy pressure towards the end of last week's trading session. And with this situation we have here, we have a simple channel between the $70 and the $65 area, which we shall be using to guide trading activity for this week. And you all know what we look out for whenever we do have this kind of channel. We want to remain patient for price action to either break out of the channel to the upside to give us a counter trade opportunity, or a breakdown to the downside, breakdown of the support line of the channel to give us a selling opportunity, which is likely going to be a trend continuation to the downside. So the current channel we've identified here has a potential of a reversal pattern, at the same time the potential of a trend continuation to the downside. So now that we're heading into the new week, how do we intend to take advantage of this trading opportunity? Well, one thing for sure we want to be doing is to see how price action, how participants in this market has been reacting to this current structure to decipher what our next line of action will be. And if you look at what has been happening here in the last 12 hours, you will see that the $65 level that we have here, which I said is a support line of that flat channel, also shares a beautiful confluence with the support line of that descending channel that we identified earlier, making this area a critical point in this market where the need to understand what is going on here will go a long way in giving us a clue into where price action will be going for this week. So what we want to be doing right now is to scale down to a much more lower time frame so that we can see how participants in this market has been reacting to this current structure. So scaling down into a much more lower time frame like the 1 hour time frame, this is what I was able to identify here this morning. So look at how price action started the week here. We saw price started on a bearish note here, though we had the bullish gap at the beginning of the week here, which gave us a clue that there was some trading activities during the course of the weekend which pushed price to the upside. But as soon as market resumed this week, we saw our price started at around the $67.50 level. That is the highest point price has ever been for this week, hereby making that level our resistant line for this week. Then we saw price action drop back into the $65 level, which shares a confluence with the support line of the channel we identified on the 4 hours time frame. Now in the last 4 hours here, we have been seeing some buy pressure resume around the support line here, which also shares a confluence with the support line of that descending channel that we identified on the 4 hours time frame. So like we said, with a channel like this, we want to see either a breakout or breakdown of the channel to give us a trading opportunity. And in this regard here, with a channel already identified at the beginning of the week between the $67.50 level and the $65 area, we want to see a breakout to give us a trading opportunity. So with a sell stop order sitting below the $65 level, we want to be joining a trend continuation to the downside if price action breaks down that structure. Then a buy stop order sits above the $67.50 level just in case price action climbs up and resumes a potential counter trend opportunity. So these are the things we shall be looking forward to today. So let's position ourselves in such a way that we can catch any of this trading opportunity when the market finally transitions into giving us a signal of where it wants to be going. But personally here, I already have a sell stop order triggered at this point with the hopes that price action will be continuing to the downside at this point. So these are my views here on the US oil for today and for this week. If you do have any questions, feel free to drop your inquiries in the comment section of this video. So I will be taking the next 10 to 15 seconds to read through the chart and see if there are any questions before I move on to the next pair. Alright, so in the absence of no questions, I want to assume that we are on the same page here. So I will be moving on to the next option. So the next option we shall be looking at this morning is the US tech. Now on the US tech, what is our expectations here? Well, during the course of last week's trading session, we had the opportunity of having some buy positions on this pair as we were able to ride the move all the way from around the $12,000 area into the 12,600 area, hereby scooping over over 500 pips in profit if you had only one position, and definitely we had multiple entries on this one. And congratulations to those who are part of this profitable journey on the US tech. Now that we are going into the new week, we want to be having a fresh new look at the chart to see how we can take advantage of any trading opportunity here. Well, for the sake of those who are not part of our previous sessions on the US tech, let's quickly run through the whole chart on the daily time frame so that we can all be on the same page here. So the first thing we observed on the daily time frame of the US tech is the fact that price action has been bearish. So throughout the course of last year's trading session, we saw price action continue to find lower highs, and when we connected the series of lower highs here, we had this bearish trend line figured out. And things got a little bit interesting later on the year. That was in the month of June/July. As you can see, around the $11,000 area, all attempted sellers to break down the structure was negated by the buyers in this market. So we saw accumulations of buying pressure around this area, which finally led to the breakout of that bearish trend line here during the second week of this year. And at this point that price action broke out of that trend line, we realized that the trend line is no longer strong enough to hold on to bearish momentum in the market. So in fact, throughout the course of this year, at the beginning of this year, we saw our price action had consistently found higher highs and higher lows, and to further buttress the strength of the buyers since the beginning of this year, we have this bullish trend line figured out after connecting the series of higher lows in this market. Now, as soon as price tested the 12,900 level, we saw the situation here where selling pressure resumed. Price action transitioned into a reversal pattern in the form of a double top structure, and you all know what we look out for whenever we have this kind of double top structure. We want to see a neckline area which falls around the 12,300 level. So a breakdown of the neckline will definitely trigger a sell position. And look at what we saw here during the mid-month of February. We saw the breakdown of both the neckline area, which shares a confluence with the bullish trend line to give us a bearish signal at that point. However, in as much as we saw this reversal pattern here, we saw that as soon as price came back into the structure between the $12,000 level and the 11,700, we begin to see buy pressure resume around that area. And if we go to as far back as the month of November, you will see that that same level was also a key determinant of price action, as this area was a strong selling niche for participants in this market throughout the month of November stroke the first couple of weeks in December. It was a strong selling niche. Then after the breakout of this level here during the first week of the month of February here, we have seen a situation where price has come back to do a retest of that structure. Buy pressure resumes around that area. Price action transitioned into something that looks more like a double bottom structure with a neckline at the $12,300 level. Breakout of the structure during the second half of last week's trading session, and at this point we might likely be seeing a trend continuation to the upside. So with the situation we have here and the information we have gathered on the daily time frame, what is going to be our expectations as we head into the new week? Well, first of all, I would like to extend this out a little further. That is the 12,900, which has been a strong selling niche for quite a while now. If we go to as far back as the month of March last year, almost a year ago, we can see that level was a strong selling niche at one point. We had a couple of breakouts of that structure. We saw selling niche here in the month of February too as well. And it's also an area we want to be focusing on when price action gets into that structure, where a breakout of that level will definitely be welcoming additional buy position in that regard. But most importantly for today, we want to be seeing how price action is currently reacting to the 12,600. This is where price action got to last week, and price action is still trading around that area since the beginning of the week. So we want to see how price action has been reacting to the structure to decide if we are going to be buying or selling. Now, if we look at the breakout of the 12,300 here last week, from a technical standpoint, we should be expecting that price could come back and retest the 12,300 level in anticipation of a trend continuation to the upside. This is a technical expectation. It's more of a theory, but it's not all the time that we normally see this kind of situation. In fact, price could evolve into a trend continuation pattern here, where we see a consolidation phase, breakout of the bullish rectangle pattern to incite a trend continuation to the upside. So these are the things we shall be looking forward to. So are we going to be seeing a trend continuation pattern around the 12,600 to join a bullish momentum in this market? Or are we going to be seeing a reversal pattern that will incite a retracement back into structure in anticipation of that bullish move to the upside? So in order to have a clue into this, we want to be scaling down into a much more lower time frame, like the 1 hour time frame, to see how participants in this market has been reacting to that area around the 12,600 level. Now, going back into the 1 hour time frame here, this is what we were able to identify here. I think I would like us to quickly have a look at the 4 hours time frame here, as we'll get to understand things a little bit better on this one. So let's look at the 4 hours time frame first of all before we go into a much more lower time frame. Now, on the 4 hours time frame, remember we identified the structure here last week after we realized that throughout the month of February, price action has been bearish in such a way that we identified lower highs here, and when we connected a series of lower highs, we had this bearish trend line figured out. However, something interesting is happening here based on this current structure. Despite the fact that we are seeing lower highs in this market, at no point did we see a lower low. As you can see here, 11,800 has been negating all attempt by the sellers to break down that structure or find lower lows in this market. And for the fact that the negation of buyers here existed throughout the month of February stroke the first couple of weeks in the month of March, it is a beautiful signal that buyers are very, very strong in this particular market. And this was evident throughout the course of last week's trading session, as we saw bullish momentum began at the 11,800 level, and we were lucky enough to be part of this bullish momentum, which finally led to the breakout of that bearish trend line, which gave us a signal that the bearish trend line is no longer strong enough to hold that bearish momentum. Now, with the breakout of the bearish trend line here, which also shares a beautiful confluence with that key structure here at the 12,250, we should be expecting price to do a retest of structure at one point in time, as those who took advantage of this bullish momentum here would likely want to be doing some profit taking activity at some point, and this will be reflected on the chart in the form of a retracement phase into structure, where the appearance of buy pressure will resume another wave of bullish momentum to the upside. So these are the things we are going to be looking at, and if we take into consideration this impulsive move to the upside here, we want to be using our Fibonacci retracement tool to run through that impulse leg so that we can identify the culmination of a retracement if a retracement ever happens in this market. So in that regard, we shall be identifying, okay, hold on a second, I think this is where the previous impulse leg, or here, let's use this one from this level, that's from the 11,900 rather. So we should be aiming at an area between the 50 and the 78.6% of that previous impulse leg. And if we do that, we should be having an area between the 12,300 and the $12,050 area. So let us label this for the sake of clarity. So we have this area as a TP target zone for sellers. That is, if we start having counter trend opportunity later on today. So we have a TP target for sellers here, and that same area will also be serving as a potential demand zone, or you can call it a buy zone. Okay, so we call it a buy zone All right, so let's have this like this and delete the retracement tool. So now that we have this identified here around the 12,250 level, and as you can see, the zone also shares a confluence with both the bearish trend line and the 12,250 area. So now we want to scale down to a much lower time frame to see how participants in this market has been reacting to the 12,600 area to decide if we are going to be buying or selling. Now scaling down into the 1 hour time frame, this is what I was able to see here at the beginning of the week, and it is quite obvious that price action has been consolidating here. As you can see, price has been trapped between the 12,620 and the 12,410 area in the last 12 hours. Now I think 11-12 hours now, price has been trapped within this range. And you all know what we look out for whenever we have this kind of setup. We want to see price action either break out of the structure to the upside to give us a buy opportunity, or a breakdown of this to the downside to give us selling opportunities. Now with this situation here, with this expectation in mind, we want to be having our stop order above the 12,620 for buying opportunity, and a sell stop order below the 12,410 for selling opportunities. Now another thing, coupled with the current structure we have here, another thing I was able to identify here is the fact that since price action got into the 12,650 area, we have been seeing a situation where price has been finding lower lows and lower highs. And when we connect the series of lower highs here, we have a bearish trend line figured out, which price has been consistently respecting here in the last couple of days. So will this trend line continue to hold bearish momentum? So as we head into the New York session today, we shall be using this bearish trend line as a yardstick for trading activity. So to further emphasize the importance of the structure, let me make this a little bit thicker. All right. So what we are going to be doing now is to use this trend line as a yardstick for trading activity for this week. And what do I mean by that? So if price action continues to trade below the trend line, that is, we continue to see rejection of this trend line during this week or today, we will be thinking and getting ready to sell. So since we have a sell stop order below the 12,410, we want to be seeing a breakout of that structure for our position to be triggered. A retest of structure will be welcoming additional position to our existing trade. And mind you, a breakdown of the $12,410 level at this current point in the market is going to be considered as a counter trend opportunity. As I said earlier, it's going to be a retracement phase, and we should be having our TP target between the 12,300 and the $12,050 area. So we should be having a minimum of about 130 pips to catch here if price moves that direction, and a maximum of about 350 to catch if price action moves in that direction. So for any selling opportunity in this market, our TP target will fall within the 12,250 area, where however price reacts to the 12,250 will now determine if we are going to be adding more position to our sell trade, or we might be getting ready to join another wave of bullish momentum to the upside. So if price action drops into the structure and we start seeing something like a reversal pattern, probably in the form of a double bottom structure from this area, then we shall be getting ready to join a trend continuation to the upside. So that is that for any selling expectation in this market. Now for buying opportunity here, that is, if this whole structure here turns out to be a trend continuation pattern, then I want to see price action take out this bearish trend line. That is, if a takeout of the bearish trend line happens, then I want to be seeing this as a bullish signal and a confirmation that a trend continuation is likely going to be happening from this current structure. Then if that is going to be the case, I want to see some confirmations to happen, a retest of structure. We scale down to our lower time frame to look out for this. Buy pressure resumes above the structure, then we could join to the upside. Then a further breakout of the 12,620 will be welcoming additional position to our existing trade. So this is what we shall be looking at on the US tech for today. So I hope that we'll be on standby to catch this opportunity when the structure matures. You might also want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this pair. If you have questions, please feel free to drop your inquiries in the comment section. Now, moving on, we are going to be talking about alright, so moving on, the next pair we are going to be talking about today is the GBPUSD. And on the GBPUSD, let's take a quick technical dissection of the daily time frame to see what is really going on in this market. Now, yesterday's trading session for us was we had some buy opportunities and some sell opportunities during the course of last week. Last week's trading session started with a bearish momentum, as we saw last week resume at the 1.2200 level. Price dropped into the 1.20 area, and we saw the resumption of buy pressure above the structure to bring price back into that area. However, prior to yesterday, last week's trading session, we identified this bearish trend line here, which we said a breakout retest of that structure will be signaling a trend continuation to the upside. And with the trading activities last week, we can see that the structure we have now seems more likely to be a trend continuation pattern, as we saw the breakout retest of this trend line and the 1.200 level to give us this situation that we have here. And if we look at this current structure here, we can see that in the last 4 months, price action has been consolidating between the 1.24500 level and the 1.18 area. And since the beginning of this year, price action has been bullish. This is where price action started this year at the 1.18500 level, and as soon as price came back into where it started the year, we saw another wave of bullish momentum began from this area. So with the situation we have right here, we want to be scaling down into the 1 hour time frame, as we have this 1.2200 level, a key level which we shall be using to guide trading activity for this week. So what this simply means is that we want to see how price action will be reacting to the 1.2200 level to decide our trading opportunity in this market. The situation here could transition into a reversal pattern, possibly to incite a wave of bearish momentum to the downside, or it could transition into a trend continuation pattern where a breakout of the 1.2200 level will welcome additional buy position to our existing trade. So with this information we have gathered here, let's scale down to a much lower time frame. Let's see how price action has been reacting to the 1.2200 level since the beginning of this week. Now, scaling down into the 1 hour time frame, hold on a second, let's look at the 4 hours first to see if there is something I would like to share with you here. Okay, so I would like to show you something on the 4 hours time frame, which I think is necessary we take note of before going into the details on the 1 hour time frame. So on the 4 hours time frame, you will see that we have since the beginning of the month of February, the pounds has been dropping to the downside, and in fact we had a trend line. This is a major trend line to emphasize the strength of the dollar in this market. Then we saw price drop to the downside, breaking down the 1.220 level, which we identified on the daily time frame, and which I also said here is going to be serving as the key level for this week. Now, since the breakdown of the 1.220 level during the first week of the month of February, we have seen here that price action has continued to trade below that structure to further emphasize the strength of the sellers at this particular point. And because of this, I was able to identify a supply zone here at around the 1.22500 to further buttress the strength of the sellers in this market. Now, the situation of things right now, you can see that price is back into that supply zone, so we are within the seller's territory at this point, where the tendency of a sell momentum is likely going to be very possible at this particular point. But one thing that made me not to jump into this conclusion right away is the fact that the last couple of weeks here we have been witnessing some bullish momentum in this market. So if you look at what happened 2 weeks ago on this market, as soon as price got back into that demand zone where price action started the new year, we saw some bullish momentum spring out of the structure. And if you look at this chart closely, you will see that we have a descending channel within this trading activity in the month of February, and we saw the breakout of the resistant line of that descending channel. We saw a retest of that resistant line of descending channel to give us a bullish signal at this point. So we had something like this breakout of the resistant line, price action came back to retest structure, buy pressure resumes above the structure, and there is a high chance that price action will be taking out the supply zone here, which also shares a confluence with this bearish trend line that we identified earlier. So these are the things we shall be looking at. Despite the fact that we are within a sell territory, we want to see certain pressure within that area on our lower time frame to confirm that sellers are still very strong in this market. However, if we start seeing strong buy pressure around this area, then the buy pressure we saw that led into that structure might likely take out all the sell positions in this area. So this is what I wanted us to know before I scale down to a much more lower time frame. Now what we want to be doing now is to scale down to the 1 hour time frame. Now let's see how participants in this market has been reacting to the 1.2200 level. Are we going to be seeing buy pressure around that area? Are we going to be seeing strength of buying power there, or are we going to be seeing selling pressure around that area? That we will know when we scale down to the 1 hour time frame. Now this is the 1 hour time frame here, and this was what I was able to identify here. Now that is the 1.2200 level, which I told you is going to be serving as our key level for this week. That is it there. And one thing you would notice here is that price action has been consolidating since the beginning of this week to further emphasize the indecision in this market. And I told you earlier that if you look at the economic calendar here, this week is laced with a series of macroeconomic events that will be affecting both the pound sterling and the US dollar. In fact, the US dollar has majority of this event here on Wednesday. We have the consumer price index on Wednesday, and we have the FOMC coming up on that same Wednesday for the dollar. We have the interest rate decision coming up. We have the interest rate projection, and we have the FOMC press conference. So these are events that majority in this market will be anticipating, and to anticipate this kind of event, we shall definitely be seeing choppy situation happen in the market to further buttress the indecision in that market. And it appeared the week has started on that note here, as we saw how price action has been trading between the range between the 1.22100 level and the 1.21700 area to further emphasize the indecision in this point. Now we have the resistance point for this week sitting at the 1.22100 level. This is the highest point price has ever been for this week. And then we have the support line for this week sitting at the 1.21700 area, where we have been seeing buy pressure resume from that area. And you all know what we look out for whenever we have this kind of setup on the chart. We want to remain patient for price action to give us a signal, which is likely going to be coming in the form of a breakout of the resistance line of the channel to the upside for buying opportunity, or a breakdown of the support line of the channel for selling opportunities. So what we are going to be doing here is to place our sell stop order below the 1.21700 level for selling opportunities, just in case price action breaks down that level. And if price action is going to be breaking out of the resistance line, then we want to be having a buy stop order above that level so that we can take advantage of that trading opportunity. So this is what we shall be looking at on the GBPUSD for today so far. So let's see how price action will be reacting to this channel to decide our next line of action. So let's be on standby for these opportunities to mature, so that we can be part of that journey when it finally happens. You might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision too. If you have questions, feel free to drop your inquiries in the comment section. So moving on, we shall be talking about the XAUUSD. And on the XAUUSD, this is what we were able to, let's quickly run through the daily time frame here. And on the daily time frame, I'm looking at what happened during the course of last week. It was a very profitable situation for us last week, as we were able to join this bullish momentum above the 1,900 area, and as you can see, price action significantly moved to the upside, breaking this structure at the 1,960 for the first time this year. Now let's quickly run through what happened prior to this current moment. So if we go to as far back as the month of September/October, you will see that the XAUUSD has been very bullish in the last 4 to 5 months. And to further emphasize the strength of the buyers in this market, I was able to connect a series of higher lows here. So we have a couple of trend lines to further buttress the buyer strength in this market. So there is one here, and then there is this major one at this point. Now zooming into the beginning of this year, we finally saw the breakout of the 1,820 level at the beginning of the year, and price action came back to retest the structure, sharing a confluence with that bullish trend line. Price action transitioning into a reversal pattern in the form of a double bottom structure. Price was unable to break the previous low, and with the neckline at the 1,860, we had the breakout of that structure to the upside. And now with the situation of things right now, price appeared to have tested the $2,000 level, a very strong psychological level that all eyes will be focused on during the course of this week on the XAUUSD. Now to further show you the importance of the $2,000 level, I want us to look at this, look at what happened around the $2,000 level. Just exactly almost a year ago, we saw as soon as price got into the structure here, we saw a sharp rejection of that level to the downside, and it was at this point the crash in the gold began. That was after price tested the $2,000 area. So what this simply means is that price action coming back into the $2,000 area, we are at a critical point in this market, as however participants in this market react to the structure will be triggering a massive move to either side. It could be a massive move to the downside to retrace back into structure in anticipation of a bullish momentum to the upside, or it could be a breakout of the $2,000 level to incite a trend continuation to the upside. So these are the things we shall be looking at on this chart when we scale down to a much more lower time frame. Now scaling down into the 4 hours time frame here. Hold on a second, let's look at the 4 hours time frame. All right, okay, so there's not much to talk about on the 4 hours time frame here, but the fact that price has broken out of the 1,960, and since the breakout of the 1,960, we want to see how price action will be reacting to the structure. So this might take about 2 or 3 more hours for this structure to mature, but one thing we want to take note of here is this: is this structure we have here going to turn out to be a reversal pattern, or is it going to turn out to be a trend continuation pattern? So if it turns out to be a reversal pattern, then we might likely be seeing profit taking activities happen, as those who took advantage of this bullish momentum will want to be doing some selling to make some money off whatever they have made so far, and that will result in price action probably dropping back below the 1,960 to retrace back into a key structure before another wave of bullish momentum happen. So that is one scenario we are going to be looking at on a lower time frame. Then another possibility that could happen here is, following this impulsive move to the upside, price action could transition into a trend continuation pattern, probably a bullish rectangular pattern, breakout retest of structure to incite this trend continuation to the upside. So in order to identify this, we need to scale down to a much more lower time frame. Now on the 1 hour time frame here, this is what we were able to see here since the beginning of this week. Price started the week on the with an indecisive state here, as we saw price action trade between the 1,990. So this was the resistance point initially for this week. So we had a resistance point at the $1,990 level, and we had a support line for this week sitting at the 1,970. And you all know what we look out for whenever we have this kind of simple setup. We want to see price action either break out of this channel to the upside or breakdown of this channel to the downside for trading opportunity. And as a result of this, look at what has happened here in the last 4 hours. We saw the breakout of that resistance line at the 1,990, which led to the breakout of the $2,000 area. And you all know that the $2,000 level is a very key significant structure where price has not been at this level in the last 1 year. And if we cite a breakout of the structure, it's going to take some time before buyers acclimatize with that structure. So most of the time we are going to see something like a sharp breakout of that structure. Sellers come in to take some profit, and then price will go through a retracement phase, a consolidation phase around that area to acclimatize with that area before the big bang happens, breaking out of that level. So that is one possibilities we are going to be looking at as we analyze this current market structure. So now with the situation of things right now, and with a breakout of that resistance line at the 1,990, I will be tending towards a bullish momentum in this market. So with the situation we have here, let's have a buy stop order above the 1,990, and let's see this sell pressure here following the breakout of that $2,000 level has a retracement phase. And one thing we want to be seeing is buy pressure resume around this area. It could turn out to be a double bottom structure, breakout retest of the neckline, after which we want to be joining right above the 1,990 level. And we look out for buy more opportunities to add more position at the breakout of the $2,000 area, and we continue to ride the move all the way to the upside. And in order to guide our trading activity for today, we have this bullish trend line figured out here. So I have this bullish trend line figured out here. So what this simply means is that if price action remains above this bullish trend line, we shall feel comfortable in our buy position. So we want to see price action continue to trade above this trend line to feel comfortable in any buy position that we have in this market. So we hope that this bullish trend line will continue to ride that bullish momentum all the way up to the upside. But if at any point in time price action breaks down the bullish trend line here, we want to be seeing this as a signal for a momentum shift. And if a price breaks down the structure like this, something like this, breaks down the bullish trend line, well, at this point we want to be anticipating a selling opportunity. But we are not going to be joining the selling opportunity right away. As you all know, this is a long-term bullish momentum in this market, and a breakdown of that bullish trend line might likely turn out to be a false breakdown where price will climb back up to the upside. So for us to join a sell position in this market after the breakdown of that bullish trend line, we want to see further confirmations to happen, which is likely going to come in the form of a retest of the structure, that is the retest of the bullish trend line, or the retest of the 1,990 level. But most importantly, what we want to be seeing on our lower time frame is a sign that buyers are unable to break out of the 1,990 as they are met with selling pressure around that area. And if this happens, then we want to be getting ready to join that decline to the downside. And a further breakdown of the 1,970 will welcome additional position to our existing trade. A further breakdown of the 1,960 level here, which is the key level we identified on the daily time frame, will also welcome additional position in that regard. So that is how we want to be looking out for selling opportunities in this market. We want to see price action break down, retest the structure, then we can be joining that decline to the downside. But if price remains above the bullish trend line, above the 1,990, we feel comfortable in our buy position. So in that regard, we already have a buy stop order above the 1,990 level in anticipation of a trend continuation to the upside. So let's keep this in mind, and let's keep our minds open in case the opposite happens on this chart. If you have questions, feel free to drop your inquiries in the comment section. I think I'm already out of time, but let me quickly take on the CADJPY as promised, so that this will be part of the pairs we shall be monitoring for this week. So CADJPY, where are you? Okay, I don't think I have it in my watch list. It's been a while since I traded that pair. Okay, let's look for it then. Let's look for it then and treat it as the last instrument for today. All right. Okay, so CADJPY here. So we shall be scaling up into the daily time frame. Let's quickly look at what is going on this chart. So, well, if we look at what is happening here, and I'm zooming out to as far back as the year 2020, and looking at the structure here, it's quite obvious that price action has been bullish. And to further buttress this, what we want to be doing now is to connect the series of higher lows. So we shall be bringing out our line charts. Now let's connect the higher lows here, and we have a beautiful bullish trend line figured out at this point. So we are still going to make some readjustment when we bring back our candle chart, but let's just draw this one out first. All right. Oh, beautiful. So we have a bullish trend line figured out now. So we shall be bringing back our candle chart here and do some readjustment to fit in this current structure. Here we go. All right. So we have a bullish trend line figured out right now, and price action has consistently respected this bullish trend line in the last 3 years. Now, with the situation of things right now, it appears price is trading along the bullish trend line right now. And during the course of the second week of the month of January, we also saw a test of that bullish trend line, but price was unable to find a higher low. Instead, we found a lower high at this point to further emphasize that there is a tendency that price action might break down that bullish trend line. So in order to guide our trading activity for today, for this week rather, we will need to identify some structures here which we shall be using. And one thing I will be doing here is to zoom into what has been happening on this chart since the beginning of this year. And if we do that, we have something like this. Bring back our line chart, and then we you see we have a structure here at the 98, or let me call it the $99 level. It's a very strong psychological level there. Okay, 99. So that has been a strong resistance point. Let's label this $99 level. Let me place this at the top right hand side of my screen. Okay, give this a blue color. All right, now I want to something like this. So we have the $95.80, or can we call it 96? Okay, 96 is most preferable. Okay, so we have the 96, and we have the bottom line here. So we have something that looks like a flat channel around this area, and if we take into consideration the impulsive move that led into this channel, I think I also have something here falling around the, hold on a second, is that the $100? Okay, I think that's the 101. I guess is the 101. Okay, so we have another structure here in 101. Hold on a second, please, and please pay attentive to this one. It could be a little bit complicated, but it's simple if we can be patient enough to understand what is really going on here. So here we are now, and we have something like a flat channel where price action has been trapped between the 101.00 level, 101.00 level, and the 96.00 area since the beginning of this year. And if we take into consideration the impulsive move that led into this consolidation phase here, it's very likely that we might be seeing this turn out to be a trend continuation pattern where a breakdown of the $96 level will be welcoming a selling opportunity in this market. And if you look at the support line of this consolidation phase at the $96 area, it also shares a beautiful confluence with that support of that bullish trend line we identified earlier on the daily time frame. Now, with the situation of things right now, the last couple of candles here are looking more engulfing to the bearish side. And let's see how price action has been reacting to the $96 level since the beginning of this week to decide if price action will be respecting that bullish trend line one more time to incite a bullish momentum to the upside, or we could be having a breakdown of that structure to send price crashing further to the downside. So in that regard, we will be scaling down into a much more lower time frame to see how participants in this market has been reacting or will be reacting to the $96 level since the beginning of this week. I keep saying dollar, it's not dollar, it's the Japanese yen, 96 Japanese yen level. All right. So we shall be scaling down into the 1 hour time frame right now. So we want to see how participants in this market has been reacting to that structure. Now, before we scale down into the 1 hour time frame, I want to emphasize that we have been witnessing some selling pressure here in the last couple of weeks in this market. As you can see, if I bring out my line chart now, you will see that you will see that we've been witnessing some lower highs here since the beginning of this month of March. And if we connect the series of lower highs here, we have a bearish trend line figured out at this point. And I will be giving this a red color to emphasize the bearish momentum in this market. And if this leads into a breakdown of the $96 area, definitely we'll have no choice than to position ourselves for selling opportunities in this market. And with the bearish trend line figured out at this particular point in time, we are going to be using this bearish trend line as a yardstick for trading activity for this week. So what this simply means is that if price action continues to trade below the bearish trend line, we shall feel comfortable in our sell position. But if a breakout of the trend line happens, then we might likely be seeing a reversal pattern coming in this market. But in the meantime, price is still trading below the bearish trend line, and in fact, it appears we already have a breakdown of the $96 level, probably in preparation for a sell-off in this market. So like I said, we are going to be scaling down into the 1 hour time frame here, where we want to see how participants in this market has been reacting to the structure since the beginning of this week. So I will be bringing back my $96 level closer into the current structure. So where is our 96 here? 96 is around this area. So 96 will be around here. And since the beginning of this week, hold on a second. Where did the week start for us here? Okay, the week started here. And hold on a second, please. Hold on. Let me look for. I'm looking for a structure here which I normally use. Okay, so the week started here, and then we saw the resistance point for the week sitting around this area. So now this is the resistance line for the week at the $96. Let's call this 85. Is it 96.85 Japanese yen level? So this is our resistance line for the week. I'll be giving this a different color to differentiate it from. Okay, so we have the 96.85. So we have the 96.85, which is the resistance line for this week, and we have the support line for this week. So we have the support line for this week sitting at exactly that 96 Japanese yen area. So let's just relabel it 96. So now that we have a breakdown of the support line for this week here, that is a beautiful signal for us to join a sell momentum in this market. So we had a situation here where price was, I would like to drop this down a little bit. Okay, so we had price action trapped between the $96.85 level and the 96.00 level in the first 10 hours in this market. Now we saw this engulfing bearish candle breaking down the support line for the first time in a long time, and price action appeared to have retested the structure. Well, at this point, I will be advising to sell the CADJPY at this area. So if we are going to be selling here, we should be having our stop loss somewhere right around the $96.85 level, which happens to be the resistance line for this week. That was the highest point price has ever been for this week. So we hope the price will continue to the downside here. If it does, we want to be thinking of adding more position, and I think we have a structure here which could be welcoming additional position, and that falls at around the 95, another psychological level there, 95.00 area. So if price action drops below that level as well, we will be looking forward to adding more position to our existing trade. So we have a sell breakdown retest of that structure to join another selling opportunity in this market. So like I said, on the 4 hours time frame, the bearish trend line here, which has been supporting this bearish momentum since the beginning of this month, will continue to guide our bearish momentum to the downside. So as long as price remain below this bearish trend line, we shall feel comfortable in our sell position. However, in as much we continue to look out for selling opportunities here, we should also consider the possibilities of a buy momentum coming in. And if that is going to be happening, we want to be getting ready to also join that move if it comes up. And like I said, since the bearish trend line here is our yardstick for trading activity for this week, definitely a breach of that trend line, which also shares a confluence with the resistance line for this week at the $96.85 level, will definitely be welcoming a buy position in this market. And if the breakout of that structure happens, please want you to hold on and wait out for further confirmations to happen, which is likely going to be coming in the form of a retest of that structure. It could come in the form of a retest of the $96.85 level, or the bearish trend line here, where the appearance of buy pressure on our lower time frame will definitely be giving us a confirmation to join that bullish momentum to the upside. So let's be on standby for all of these opportunities, as I call it a day on the CADJPY. Well, for the sake of those who are not part of the beginning of this live session, let's quickly do a quick recap of what we talked about so far. Then we can call it a day in that regard. All right. I can see your comment, my Gigi. Well done to you. Who else again? Okay, Francesco, how are you doing today? Good morning. All right. So the first commodity we looked at this morning is the US oil, and on the US oil, we are running in a loss right now. Price, though I've been taking, okay, I'm running in a loss right now as price action has climbed back above the $65 area. So let's see how this is going to be playing out in the next couple of hours. Are we going to be taking out of this trade, or is this just going to be a false breakout to the upside? So let's keep this in mind. Let's keep monitoring price action. And for those who are not yet in this trade, you might want to have your sell stop order below the $65 level in anticipation of price dropping back to the downside. And for those, I told you earlier that we have a buy stop order above the $67.50 level. If price action ever breaks out of that structure, then we might be seeing a counter trend opportunity back into probably the $70 level. And if a breakout of the $70 level happens, we want to be adding more position at above that level when we identify buying pressure above that structure. But at this point in time, I'm still tending towards a bearish momentum here, with the hopes that price will still break down the $65 level. So that is that on the US oil. You might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this pair. Now moving on, we're going to talk about the US tech here, and on the US tech we also identified a simple setup here, which I said we can use to guide trading activity for today. So despite the fact that price action is trapped between the 12,620 and the 12,410 since the beginning of the week, we had this bearish trend line figured out after connecting the series of lower highs. So what I simply said here is that the bearish trend line we have here will continue to guide our trading activity for today, where if price action trades below the structure, we feel comfortable in our sell position. But if a breakout of that structure happens to the upside, then definitely we want to be joining a trend continuation to the upside. So like I said, we have a sell stop order below the 12,410. So if a breakdown of that structure happens, we are going to be having our TP target between the 12,300 and the $12,050 level, where we should be having between 130 to about 350 pips in profit if price action moves in that direction. And I told you that we are going to be using this area as a potential buy zone if we identify a reversal pattern around that area. However, if this structure here turns out to be a trend continuation pattern, then definitely we want to be seeing a breakout of this bearish trend line, buy pressure above the structure, then we could join that bullish momentum to the upside. Then a breakout of the 12,620 will be welcoming additional position to our existing buy trade. So let's be on standby for these opportunities. Then we went on to talk about the GBPUSD for today, and finally we already have a buy position triggered on the GBPUSD right now. And let's see. Okay, we already had a buy position triggered. Remember, stop loss remains somewhere right around the 1.21700 level, and let's see how far this bullish momentum is going to go. Then if this continues to the upside, remember we also have a structure at the 1.22400 level, which also shares a confluence with that is it 22400 or 22450? Okay, 22450. Okay, so we also have a structure around that area which shares a confluence with the bearish trend line we identified on the higher time frame. So a breakout retest of that structure as well will be welcoming additional position on the GBPUSD. So let's be on standby to catch that opportunity too as well. And we went on to talk about the XAUUSD for today. And on the XAUUSD, I told us all that we have a simple setup here where price action has been trapped between the 1,990 and the 1,970 since the beginning of the week. And I told us all that we should be having a buy stop order right above the 1,990 and the above the $2,000 level in anticipation of a trend continuation to the upside. So the breakout of the resistance line at the 1,990 is the basis for this bullish expectation in this market after price action broke out of that resistance line like 4 or 5 hours ago. So I'm seeing this probably as a retracement phase of that impulsive move, where the appearance of a reversal pattern here on our lower time frame is welcoming and a buy position for us in this market. So let's be on standby to catch this opportunity. And remember, I told you that this bullish trend line here is going to be guiding our trading activity. So if price continues above this level, we remain very, very comfortable in our buy position. However, if price action breaks down the bullish trend line here, then definitely we want to be having a momentum shift in that regard. So if we see this kind of situation happen, price break down the bullish trend line, remember we are not getting too excited. We still need some further confirmations to happen, which is likely going to come in the form of a retest of the bullish trend line or the 1,990. But the most important thing we want to be seeing around here is a reversal pattern on our lower time frame, breakdown retest for confirmation. Then we could join the sell opportunity to the downside. Then we could add more position at the breakdown of the 1,970 and the breakdown of the 1,960. So we have the tendency of having multiple entry if price action ever breaks down that bullish trend line to the downside. But at this point, I'm of the opinion that we might be going bullish on this one, considering the breakout of the resistance line here. But if the bearish momentum happens, then we also want to be on standby to catch that opportunity. Then we went on to talk about the CADJPY. Instead, I was supposed to talk about the USDJPY, but for the fact that someone introduced CADJPY to us in the house, so we needed to treat it. And on the CADJPY here, I told us that we could sell right away the other time we got at this point, as price action has broken down the support line for the week, which falls at the 96.00 level. As you can see here, we already had a breakdown of the structure. Price appears to come back and do a retest of that structure, so we want to continue this bearish momentum to the downside. And we also have another opportunity to add more position to our existing trade if price action ever breaks down the 95.00 level. And to further buttress this current structure we have here, I told us all that we should be using this bearish trend line that has been guiding bearish momentum since the beginning of this month as a yardstick for trading activity in this market. So as long as price action remains below the bearish trend line, we should be comfortable in our sell position. And this bearish trend line is also going to be a structure we shall be using to determine where our stop loss is going to be for the sell position here, which is supposed to be right above the bearish trend line. And also remember, I told us all that the resistance line for this week is at the 96.85, and if it so happens that the bearish trend line is breached, that is, price action takes out all the sell positions along the trend line here, a breakout of the trend line will definitely be giving us a bullish signal. But we are not getting too excited here when we cite this situation. We need further confirmations to happen, which is likely going to be coming in the form of a retest of structure in anticipation of a trend continuation to the upside. So let's keep this in mind while we continue to monitor price action in this market. So it's on this note I want to wish you best of luck today in the New York session, and I'm very sure we are all equipped with the knowledge to be able to take advantage of any trading opportunity that evolves during the New York session today. And Mikey G, I saw your comments. I see your comments 233. I see your comment, Francesco. You guys have been wonderful today, and I hope to see you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review the market, review how well this pairs we are monitoring has been doing so far. Then we anticipate the New York session tomorrow. Do have a wonderful evening, everyone. Bye bye.